Welcome to the Creating Wealth Simplified Podcast. My name is Lauren Wells, here with my co-host, Chris Seveney. We're committed to providing you with the knowledge required to build wealth through real estate investing. Tired of consuming content about real estate? Stuck in analysis paralysis? Ready to do your first deal? As a member of our community, you will learn how to go from consuming content to taking that first step into the world of real estate investing. Our show is not about getting rich quick, but about providing you with the knowledge you need to take action. Join us as we speak with experienced investors who share action tips on how to escape the corporate world, start a thriving side hustle in the world of real estate, and go beyond your W-2 or 401k.
Welcome, everybody, to another episode of the Creating Wealth Simplified podcast. I am your host, Chris Seveney. Today, I have a special guest. I have Jon Jasniak with Jazz Land, and we are going to be talking about land investing. So, Jon, how are you today?
I'm doing great, Chris. Thank you so much for having me, man. Looking forward to chatting with you.
Yep. So looking forward to it as well. I love talking all aspects of real estate, and land has been something that has, over the last several years, I think really piqued a lot of people's interest, especially because of availability, price point, and appreciation, like most real estate assets. And it's for me, land, you're not dealing with tenants typically, which is always a benefit to not having to deal with them. But
That's
Jon,
right.
why don't you tell us a little bit about what you're doing today, and then we'll kind of rewind it back to talk about how you got in the space and kind of the story for how you got to today.
Yeah, sure. So here we are, September 2023. It's crazy. It's been almost 7 years since I've first started this adventure. And today I'm doing pretty much these massive subdivide projects where I'm buying hundreds of acres at a time and creating lots and selling them off to customers, a lot of owner financing and originating a lot of notes, and have started to embark, I guess, on a couple other crazy creative projects like buying the small unincorporated town, trying to work with that, these big subdivides, getting more and more difficult with the projects. But it's been 7 years now since I've just started buying one-off pieces of land and creating notes, 200, 300, 500 a month, and flipping them. So it's kind of crazy to look back on it, man. But like you said, land has been piquing a lot of people's interest nowadays, and I'm seeing more and more demand for land than ever.
So how did you get involved? You mentioned, 7 years ago. Did you just wake up one morning, or did you take see something online, a little bit more background? Like, how did you get into land?
Well, I was a 9 to 5 employee. I was a petroleum engineer, and I liked what I did, to be honest, but I didn't like going into the office. And I would listen to probably 10, 15, 20 hours of podcasts a week, read a bunch of books. I was like, man, there's got to be something more to do, especially to make some more money, and especially passive income, because I was tired of working at the office 12 hours a day. I wanted more cash flow. And so I was listening to a podcast called The Side Hustle Show, and another land guy like myself came on, was talking about the business, and started talking about his course and what was possible with land investing and land flipping. And so I bought his course and one other course, and I started studying these two courses. And after about a month or so, I was like, okay, I'm gonna dive in and buy my first piece of land. And I had a little bit of bankroll to start with for my engineering salary, and I bought 53 acres out in Hudspeth County, Texas, for $8,500. And it was
Wait, 53 acres for $8,500?
That's right. It's like what, 160, 170 per acre.
Wow.
You
Okay.
can still find land that cheap out there nowadays, by the way,
Okay.
in certain places of Texas, Arizona, etc.
Mhm.
So I buy this piece, and it's already subdivided into 5 separate, like 10.6 acre lots. And I started selling off these 5 lots, and they all sold in like a month. And I basically doubled my money. I made like 17 or 18,000 gross. And so, I doubled my money. I was like, okay. So I immediately started direct mailing and looking online and trying to find more deals. And, I was buying 10-acre lots out in Texas for like 1,500 or $2,000 and turning around and selling them for 5, 7, 10,000 and originating 150 for 72 months notes and collecting passive income. And it's kind of just snowballed from there.
Wow. So I've got, as a civil engineer, I've got like 1,000 questions as well as part of this. So when you're buying, 50 acres, you subdivide it into 5 parcels. are you just leaving the properties with, as is, not pulling in any utilities or putting in any types of wells or septic systems or pulling any public utilities, or how is that, is that how you
Yep.
typically will do it?
Yeah, on the
Mm.
quote unquote desert square stuff, which is
Yeah.
more recreational land in the middle of nowhere,
Mhm.
it's not going to have utilities, and
Yep.
it's just that's
Mhm.
its use is just rec land, and
Mhm.
so yeah, definitely not pulling in utilities. And what's crazy is a lot of pieces of land out there have already been subdivided. So for your beginner, that's how you're able to go in and buy 1, 5, 10 acre lots,
Mhm.
because people like what I'm doing nowadays with these big subdivides, like people did that back in the 80s and 90s, and then they
Yep.
sold all these pieces of cheap land off on the
Mhm.
internet. And now you got folks who are starting to get into the land game and direct
Mhm.
mailing and SMS cold calling people, and they're calling them on these little 5 acre lots in the middle of
Mhm.
nowhere. They're picking them up for, 2 grand and selling them for 5 grand. So it's
Yep.
created this huge arbitrage and niche in the
Mhm.
market.
Yep. That's wow. That's interesting. So I did want to jump back because I also heard you say that you're in the process, or looking at buying an unincorporated town.
Yeah. Yeah,
Uh,
well,
uh,
I did buy it, that would have been 8 months ago now, and it's been a whole project. It's in the same area, Hudspeth County, Texas.
mhm,
The town's called Cornudas,
mhm,
and it's got a motel, cafe, RV park, a few mobile homes on it. It's 28 acres, and yeah, that's why I just got back a week
mhm,
out there. We redid the roof on the cafe and
mhm,
spent almost 100,000 in electrical and HVAC, mini split systems,
mhm.
because it never had any air conditioning on any of these buildings. They use space heaters and swamp coolers, if you know what those are, and it kind of
Yeah. Mhm.
created a lot of problems out there.
So could you? I'm just now curious. Like, could you create your own form of, like? Could you corporate the town, create your own government for the town, put a school in, and like just put your own subdivision rules and or town, like, rules and regulations for zoning, and do whatever you want? Just curious, if that's what you can do with that.
Yeah, well, I could technically one day. I would
Mm.
have to buy more land around it,
Yep.
and start subdividing and creating lots and creating
Mhm.
infrastructure. But yeah, anything's possible. That's one thing I like about land. I think we were
Mhm.
chatting about this before we
Mhm.
hopped on, like all the different aspects of real estate. Some are dying off, like there's some
Mhm.
hot crazes and some things are
Mhm.
kind of going away, but land is never gone away, and you can literally do just about anything with land, whether it's building a town, building a assisted living complex, doing short-term rentals, building an RV park on it. And so I think
Mhm.
that's what I love about it is it's the ground floor, right? And so there's always a demand for it. The earth is not getting any bigger, and it's always going to be there.
So let's talk a little bit about now. I mean, I love talking land, and fascinating how, it's such a niche where, especially if you can buy up these parcels, which I think you're doing now, and then turn around and subdivide them, which I think can even enhance your returns even more. Now, when you turn around and sell, let's say you buy, I'm just going to keep simple numbers here: 10 acres, 10 lots, each an acre per lot.
Mhm.
You buy it and then you turn around and sell these. I'm guessing you're probably doing like a seller financing, owner carry with some of these borrowers, or are they paying cash?
Well, I'm doing a lot of things. When I buy the land, I'm actually buying a lot of it with seller financing and doing
Okay.
wraparound notes and then owner financing it off to my customers. But yes, I think what you're getting at is when I go to sell the land,
Mhm.
90% of my sales are probably or so are owner
Mhm.
financed. And then I sell those notes to
Mhm.
investors, and cash out if and when I need to. So I hold a giant note portfolio, all self managed.
Mhm.
And then I have probably a handful of good note buyers who I work with, and when I need capital, I'll sell them a good performing land note.
How many notes roughly right now do you have in your portfolio, out of curiosity?
150 to 200, just varies.
Ooh. So do you self-service those, or do you use a servicer?
Yeah. I self-service. I use the mortgage office as my loan servicing platform, and then we have
Mhm.
ACH processing. So I'll take
Okay.
monthly
Yeah.
payment, and
Mhm.
a small little accounting team that helps me on the back end, keeping track of
Mhm.
it all. But a lot of it's myself. We send the notices. Me and my ops manager will send notices. We'll foreclose people. We got a foreclosure coming up in uh, a week and a half.
Mhm.
So we'll be at the courthouse steps in Texas, taking some land back and reselling it for more, hopefully.
So it's interesting because again, we invest in notes and distress notes. We use the mortgage office as well. So it's same
There we
software.
go.
It doesn't matter, which type of loans you're doing. And like you said, as well, whatever type of note you hold, you're the bank, which, I prefer being the bank because you can control everything. And even in court cases where you do have a foreclosure here and there, you're probably going to take that property back and then you can turn around and just resell it on a new seller financing note is probably what I'm guessing is what you're going to do, right?
Yeah, it is. So we'll collect another down payment. I like to keep my down payments relatively low because the lower the down payment, obviously, the more people can afford to
Yep.
buy it. It does raise your default rate a little bit, not a lot, but for sure a little bit. But as long as
Mhm.
that's a really good asset that you can resell for the same, if not
Mhm.
more, money, then
Mhm.
why not? It's basically an ATM machine in my mind, at least.
So, so just out of curiosity, rough numbers, if I was financing $25,000 property from you, what are your typical terms, interest rate payments, how do you have a secret sauce that you like to structure these things with, or does it really just vary depending on the borrower?
Yeah, I pretty much do have, I guess, a proprietary thing that I like to keep in mind. And so,
Mhm.
number one, I don't like to go longer than a 10-year note. I'm
Mhm.
sure you know, as a note buyer, I mean, the
Yep.
longer term your note is, the more
Mhm.
discount applied to it up front if
Mhm.
I were to ever go to sell the note. So I think 10
Mhm.
years or less are the most marketable
Yep.
notes. The lower I can shorten that term, the better, because I get my money back quicker and
Mhm.
also less of a discount to a note buyer at the end of the
Yep.
day, if and when I go to sell that note. I found 500 a month to 1,500 per month is kind of the sweet spot as far as what sellers can afford. So if I can get it over $500 per month, the default
Mhm.
rate goes down. If I can get
Mhm.
it up to
Mhm.
1,000, 1,500 per month, even better. And then
Mhm.
I found as you go over 1,500 per month, less people can afford that. So when I'm selling a piece of land and I'm saying, hey, you got to pay me 2,000 per month, there's
Mhm.
not a lot of people who can afford that. And at that level, they're probably going to the bank and getting their own financing anyway. So that's kind of how I think
Mhm.
about it. I always charge 7%,
Mhm.
7% interest because I don't really think of it in terms of interest as much. I get this question
Mhm.
a lot. My deal is the face value of the note. That's what I'm marketing
Mhm.
at the end of the day. And my marketing process when I go to advertise this land, I actually
Mhm.
advertise, okay, you're paying me 500 a month for 60 months, and that includes interest.
Mhm.
So if I were to charge more interest, my principal would actually drop.
Yep.
And at the end of the day, it all comes down to, I think it would even out in the wash when I went to sell the note. If I charged more interest, the note buyer would discount it less and buy it for more today. However, if I charge more interest, I'd probably be lowering my face value for that same monthly payment to a potential buyer of mine. So it's kind of really getting in the weeds, but that's how I think about it.
Yeah.
Less in terms of interest, more in terms of just total sales price.
Yeah, and it really also depends on the value and everything. The way that popped in my head when you're talking is you try and make it be a car payment, roughly about what a car
Yeah.
payment is. And interestingly enough, for what we have found, I'm curious if you have found this with some of these notes that we have bought, and you have loans that are only 2, 3, 400 bucks per month. Those have a higher default rate than the ones that have $500, $600 because I find that the people who are in those really don't have the affordability and are literally, balancing their checkbook down to the dollar every month. I had a borrower once who could balance his checkbook, and every month he finished with like $3 in his account. And I'm like, I should actually hire this guy because he knows how to manage his money well, where he finishes every month with $3. Um, but I'm curious, part of that. And the other thing that I'll just tag on to what you said for people listening, a lot of people do get hung up on the interest rate, but you had a huge point that people need to take away. A note buyer, or when you're originating a note, I would buy a loan that is at 5 to 10 years at 7%, 100% of the time than a 30-year loan at 10 or 12% or
Yeah.
15 years. Because when you look at your velocity of money on that, the difference on a $30,000, $50,000 loan, a percent here and there, it's $500 a year. But that principal payment, that total monthly P&I payment is going to be significantly higher, which will juice up the return.
Yeah, for sure. And this is something that I highly recommend to people download a good loan calculator. There's a few out there where you can kind of lock inputs
Yeah.
and adjust everything else and kind of
Hmm.
I'm on that thing daily. You gotta
Yeah.
you gotta know your numbers and get familiar with it all. And
Hmm.
kind of back to your point, the monthly payments, for sure, the lower you go, the higher default rate is going to be. That's why I kind of moved away from your Hudspeth County 10-acre lots in the middle of nowhere, because
Hmm.
the people who are buying that only want to spend 100, 200, 300 a month on that piece of desert, right?
Yeah.
And they care less about it. They got less money invested every month. They're not as savvy financially. So, they're
Mhm.
probably going to default 25, 30% of the time. Like, it is that high of a default rate now. Me, I could reshuffle the paper and resell that land again, and it does become sort of an ATM machine. But you get to a certain level like myself where you're managing, call it 200 notes. And if they were all notes like that in the desert, it would be a nightmare. It'd be like a full-time job for me or multiple people trying to resell those and spending money on marketing. It's like, I'm sure as an investor, we just want
Yeah.
our money, and we want the people who are paying us to
Mhm.
be happy, whether it's with their house, their car, their land,
Mhm.
whatever.
Okay. So let's talk about, you mentioned you sell these notes and you have people, you sell these to and so forth. If someone was an investor and said, hey, John, I listened to the podcast, I think curious, I'd be interested in, learning a little bit more about buying a note from you. What
Yeah.
is what would you call a prototypical kind of note buyer of land? What's that kind of avatar that you've seen?
Two avatars really, I would say. One is your average person who wants monthly cash flow. They're probably working, 9 to 5. They have some money saved up. It's probably getting 5, 7, 8% interest, whatever, in a money market account or at the
Mhm.
bank nowadays. Obviously a lot less before interest rates increased. And they
Mhm.
want some monthly cash flow. And, they have 30, 50, maybe $100,000 to spend. So they buy some performing land notes and they get their monthly cash flow. Then the second avatar is the savvy investors. They know that they can probably get a little bit higher rate of return on land notes versus house notes or some of these other assets. And there's a lot of opportunity in the land space when it comes to notes, because you got a lot of good land being subdivided, creating good paper lots, and as long as you trust the operator being myself in this case, as long as that investor trusts the operator and they're doing a good job with their projects, then there's huge opportunity to go in, either buy a portfolio of notes, multiple notes, um, and offload 200, 500, $1 million and get, a note portfolio that is performing for land. I'm gonna ask you, what do you kind of target for your IRR or your yield when you're buying a note? What do you want to make annually, you think, as an investor?
Yeah. So for us, on the performing side, we want to be in the low double digits, is where
Okay.
we'll try and target. And then on the non-performing stuff, we want to be in, the low 20s on the non-performing stuff, just because of the risk and the time. But it varies depending on everybody. If you're using your own capital or if you're using other people's
Yep.
capital, what's your cost of capital? But one of the things that you mentioned, that I just want to touch upon, and I'll let you jump back to your follow-up question, is you mentioned the sponsor and the person writing this paper. And for people listening, that is one of the biggest and most important things to take away, for anybody who's buying notes, real estate. It doesn't matter what you're buying, is who is on the other side of that transaction. And you want to make sure it's somebody who's experienced and, I'll say ethical. So
Yep.
I know there's people out there who are writing paper on many different aspects that they don't have experience or ethics, and it just, they're selling this thing, and it's just a lawsuit waiting to happen sometimes.
That's right. They're either, you know, not following subdivision regulations or not putting easements where they need to, or,
Mhm.
there's a million different things that could go wrong with a land project, and they're selling those notes off to investors. But you
Mhm.
mentioned low double digits, so on performing
Mhm.
land notes, and this is kind of touching back to my point when it comes to
Mhm.
land. I usually see 15 to 20%
Mhm.
is what I'm giving investors for their
Yep.
annual return. So it's a little
Mhm.
bit higher on the
Mhm.
land side, which is, I think, why it's attractive
Mhm.
to a lot of folks. And I'm more than fine with that. I'm giving people, on average, probably 16 to 18% annualized rate
Mhm.
of return, my note
Yep.
buyers, and I apply my
Mhm.
discount to principal value from
Mhm.
there. And back to kind of interest, not focusing as much on interest rate and all that. It's like my yields myself on these projects, my IRR is over 100%. Like I don't touch a
Yeah.
subdivision project
Mhm.
unless it's over 100% annualized rate of return for Jazz land. And so
Mhm.
I'm more than happy giving an investor 18, 20% if it's going to move some
Mhm.
notes and get some capital flowing
Mhm.
and allow me to do more projects. So it's a win-win for everybody.
Oh, absolutely. So, that's great returns and, for especially for both parties. So it's a win-win. Now, a question I always have to ask is when I hear, great numbers is, what are some of the risks involved,
Mhm.
in this?
The biggest risk for someone buying a note or even for myself is that the payer stops paying. And I had one like that with a note buyer of mine here recently. The thing with me is I always try to sell what I think are kind of my highest performing notes, and it creates more
Mhm.
of a headache for me because I'm
Mhm.
stuck managing the
Mhm.
less quality performers and the payers, but my reputation's on the line, so I don't want to
Yep.
sell you or whoever a bunch of junky notes and I
Mhm.
lost an investor in the future,
Mhm.
so my investor bought a note from me and the person stopped paying, and I will actually help folks resell them. It's pretty easy for us. We just hop back into our CRM or Facebook,
Yep.
blast
Mhm.
off a message, hey, this land is still available, or came back on the
Mhm.
market. And it was funny. This one I was able to resell for him the next day.
Mhm.
Like he hit me up, hey, so and so stopped paying, and I sent out a message to probably 100 folks, and someone's like,
Mhm.
I want it. So the
Mhm.
next day we had paperwork cooked up and a down payment check to him within a week, and he hit me up. He's like, "You really resold this in a day?" And I was like, "Yes, sir."
Uh, um, So when you do, generate the notes, are you creating a traditional like deed of trust and note? Or are you doing land contract, or what's your path for that?
Yeah, definitely deed of trust and note secured and
Mhm.
recorded at the county clerk's office. It depends
Mhm.
on the state, depends on
Mhm.
the situation. The only time I would basically recommend using a contract is on really small desert squares, small notes in the
Mhm.
middle of nowhere.
Mhm.
And there's advantages to that, but there's a lot of disadvantages. The main one being a lot of investors do not like buying contract for deeds. So, when I sell my note buyers contract for deeds, they don't want to touch it or they apply a huge discount.
Discount.
So definitely a
Mhm.
deed of trust with prom note.
Yeah, 4 or 5 years ago, well, I got in a note space about 7 years ago. The on the residential side, land contracts were a really hot thing because a lot of the paper that was originated right after 2008. There was a lot of what was happening was there's three major companies went in and were buying from Fannie homes thousands at a time and just turning around and selling them, not even doing anything to them, and just turning around and selling them to borrowers on land contracts. And
Dang.
then essentially it was great 5 years ago, but as the state started catching up on the land contracts and treating them like a traditional mortgage, it really gives no incentive at all to have them. And it's actually a hindrance. Like I've got one right now, borrower's performing, but he doesn't live in the property and it's vacant. So we're getting violations for cutting the lawn, the gutters, this, and I'm
Mm,
getting notices to show up in court. And I'm like, I'm not the owner, and like you are in the deed, but
yep.
it's a land contract. They're like, we don't care. It's yours, your problem. So yeah, I was
Yeah.
curious.
Yeah. No, I 100%
Yeah.
agree. Do it
Mhm.
once and do it right, in my opinion. If
Yep.
you can,
Mhm.
create the right paperwork and solidify with a deed of trust and
Yep.
the investors like it, it's a win-win.
Cool. So as we wrap up this episode, question I'll ask is, where do you see your company in the next 3 to 5 years?
So the goal for me is to be the most known person in the land space and help as many people as I can buy and own land and originate notes and make money from land investing. And personally, I want to have $100 million land business. Right now, it's around the $10 million mark, and we got a lot of big projects in the work. So I think I could really 10x this thing over the next 3 to 5 years. That's kind of where my mind is
Mhm.
focused, and that means a giant note portfolio,
Mhm.
working with a lot of investors and doing a lot of monster subdivides.
Yeah, wow, that's awesome goal. And when people talk about that, put the plan in place and it's attainable. In notes, the interesting thing, with our portfolio was I maxed out at probably like 300 notes at one point in time. Now I'm down to about 150, but the size of my portfolio is 4x. because the size of the note has gotten larger. So it's something that, the note space and is extremely scalable from that standpoint. But if you do want to grow, I guess, next question is, if people want to learn more about your business, how they could invest with you, buy notes from you, what's the best way for people to reach out?
Sure. It's at Jon Jasniak on any social media. Hit me up. I answer all my DMs, messages, comments, any of that stuff. And then it's Jon at jonjasniak.com. If you got a
Mhm.
land project, if you have anything you want to just send my way to get a quick look, opinion, feedback, whatever. I literally love looking at deals. I tell this to people all the time. Like, I'm obsessed. Like, people send me a land deal. What do you think about this? And I'm like, absolutely not. Or, oh, this is a perfect project. Do it this way, subdivide it just like this. And it's like, I don't know. I'm literally addicted to the stuff. So
Cool. Now, are you only in Texas or you go other states?
I do most of my investing in Texas. I have done other states, but right now it's all Texas. And some of our folks in the groups and stuff we got going on, they work nationwide. So I help them with that. But for me, I love Texas.
Well, Jon, thanks for coming on today. And for our listeners, thanks for listening. We'll have all of Jon's contact information in the show notes. And thank you all for listening to this episode of Creating Wealth Simplified. Thank you
Thanks,
all.
Chris.
Thank you for joining Lauren and I on this episode of the Creating Wealth Simplified podcast. Each week, we bring you expert education, experience, and information in a digestible format to help you identify investment opportunities so you can build wealth through real estate and take action toward your financial goals. Enjoy the show, share with a friend, or subscribe to the show and leave us a review.